Okay, let's start with the big picture first, as we usually do. It's Thursday afternoon, got the Thursday quotes in here, so that's the time frame that we're looking at to start with. You got the daily up, and you get a little doji up here at the top. That daily doji prints right on the top of the test of these breakdown bars, right? So when you're looking at a chart, I talked about quite a bit about this area here being key. Once you get over that, it would be here. And then once you get over that, it's going to go to this one. And if you look at it, that's really what happened, right? You get a break here, it's actually a gap up, takes you right to this area. You sit there and fight it, you eat up the supply. Eventually you break through supply, and then you immediately move up to the next supply zone. Now that's the last one. Once you get over this, there's nothing, right? Then it's green skies. And on this particular stock, and in the stock here, of course, is the general market. If you pull it over and we look at like the NASDAQ, right? On the NASDAQ, it's the same process, but it's just set up differently in that the NASDAQ's been weaker. And so if you go back here, you draw in that same zone, right? Gets over it, the key was here on the NASDAQ. And I talked about that quite a bit prior to it happening. I talked about it on this report right here on this day. Those reports, even if you don't, if you're not a subscriber, if you're not a member of the TAToday, although I'm a member, of course, and I'm logged in, but if you're not, you still can get to them. I'll pop over here on this particular thing. I mean, they're 2 weeks delayed, but you go to monitor activity, and when you get to that screen, you just scroll down, you can go back to that particular day. And so every morning there's morning comments. That day would have been, let's go back over here and see, that would have been the 4th, printed on the 5th. And let's see if I got it here somewhere. Right here, morning comments. Tech not as strong. If you pop in there and bring that up, you'll see there's the short covering. This is the NASDAQ. That's where we expected the short covering to take us to. And then that would be the key spot. It's about 81.12. So if we pop back over now to here, 81.12 was this area. And so that's exactly where it popped to. And that's what we expected it to pop to. And, if you're not a member, you want to sign in, just create a login, right? You can't get them live, you get them a couple weeks delayed, but if you want to learn, you don't have to watch just these videos. You can look at the material that we put out, the picks that we make, etc. Right? I remember a long time ago, way back when I was in my first economics class, the professor told me, your assignment today and the rest of the year, or the rest of the semester, is going to be read the Wall Street Journal every day. I'd never read it. I started to read it, looked at it, and didn't understand what the heck they were talking about. And that went on for about a month, 2 months. And pretty soon I started picking up on the words, the nomenclature, the names, right? The acronyms. That's all this stuff is, right? It takes a long time to really gel, to get it all in your mind. But Neoclassical is pretty straightforward, right? You've got trend and you got timing. That's it. Everything's built around those two concepts. We want the trend at our back most of the time, and we want a time when we come in, when we come out, and we want to do it on the time frames that we care about. And we want to look at all three time frames. If you could see my screen, you would see this time frame, you'd see the weekly time frame, you'd see the monthly time frame, all on my screen, all at the same time, right? I have them all up so I can see them all at once, one glance. As a matter of fact, we've got this cool thing called the trading cube that kind of gives you that view in terms of trend. All of this stuff makes it very easy to get a view of what's going on in the markets. And the key thing is to figure out what's significant, right? When I look at a chart, and if I sit here and look at this chart, and I'll go back to the daily, if I look at this chart, I always have 60 bars across the screen. Now, all 60 are not important. I only care about some of them. I care about those that we call anchor bars, and you can read about all that stuff in my books if you want. But essentially, you want to figure out what's significant. And at the time, when we talked about this, we talked about this area as being significant, and it ran right up to it. And just like we saw in the S&P, that's where it hesitated. Once it blew through it, the ideal is that it's going to run up to the next resistance zone. And so that's going to be up here. Hasn't got there, does a doji itself. These things are going to try to come back tomorrow, but there's going to be buyers sitting up underneath here again. And so, yeah, they're going to get a retrace. They're going to set up another ABCD structure, and that's going to get it up to the next one. And that's what's happening. Those things you can see ahead of time. And those things are what Neoclassical is about. If you want an edge, if you're going to trade, you better have an edge. This is an edge. It's a fairly straightforward edge that you can learn, and you can see what we printed, a good week ago, a week and a half ago. Well, I don't know. It was Wednesday a week ago. Where we expected short covering, and then where we expected, it to continue holding higher if it got over it, and that's what it did. All right, let's go back to the charts here. So that is where we're at on the NASDAQ, the daily on the S&P. They're just trying to get up to that zone. That's going to be the last zone. That's where the real struggle is going to be if there is one. They get over it. What are they going to do? Well, they're going to do ABCD structures up again. It's just the way it works. Ebb and flow, folks. All right, so that's what's happening here. Let's take and look at the stocks that the mentors want to look at, and from there we'll just move around and look at each of them. So let me pop in here. Let's see. So the first one was HRL. So if I look at HRL broke it out. Now they had a big breakout back here. You can see this wide price spread, high volume bar, right? Wide price spread, high volume. That's an anchor. Those things are strong. When you break over them, you're going to get a nice move. That's what they did. Over, under, low, less volume is going to try and pull back into this area. When it does, that's the buy. And now that's on this time frame. You really want to always look at all your time frames, though. So if we'll look at them real quick, what did it do here? Well, it came right up into resistance, right? That's anchors there. That's a swing point high. Let's see what the top was, 44.83. Got to 44.73, so it hasn't tested it. And this one it just tested. That's the breakdown bar, 44.73. Got right to it. Volume there, 14.4. We're doing 10 into it. That ain't going to cut it. Going to retrace. The buy is going to be on that retrace like we just saw. And let's see what the monthly looks like. And on the monthly, it's basically the same as the weeklies. There's some highs over here that's going to have to be dealt with. So, when you look at a chart like this, you can see that, yeah, trends are starting to head up again. Once it breaks over all this stuff, if it does, it's going to have a nice big move to the upside. But until it does, right, it's just a trade, right? It's a trade back and forth, and you can figure out your parameters. If it gets back into this zone, right, into this area, it's going to be a pretty good buy, and that's where you want to, pick it up. Your risk is back down into here somewhere, and you're going to trade back to here. If you get over that, you're going to trade into that next spot that we saw, which was the swing point high, which was 10 points higher, right? Get into the swing point high, you're probably going to have to, expect a little bit more. It's going to take a while. It's going to have to eat up the supply that's there, right? It's all about supply and demand. So to eat up the supply that's there, and once it gets over, it breaks higher. So longer term, yeah, it's good. Right now, you're going to have to trade it back and forth, or you're just going to be sitting in a long time watching it go up and down. I have to do the numbers, but you do the numbers and you see if it's worth it or not. In this case, that's a buck on 44. It's not that much percentage-wise. We're talking a couple percent. Do you want to play with this, or do you want something more high-powered? Maybe this is one of your safer ones, right? If you're going to have a portfolio, you're going to want some safe ones and you want some risky ones, right? So this is one of the safer ones. The riskier ones are the ones that have, wider ATRs, more of this up and down. This guy's like this, right? You want some of them that go like that. Put them together, you get a portfolio. That's the way you do it. Okay, that's HRL. HRL looks pretty good. Just going to be a kind of a slow mover more than likely. MDC. Now this one, when I look at the daily, I can see this was the key bar. right? Gets over it, travels all around it, and then finally breaks out multiple swing points, right? Does the retest and now regens. All of that exactly what you would expect. The thing that it did do is it blew back in here with a lot more volume, but it did hold, even though it had more volume. So that would have been hard to buy that, but the fact that it held told you that, yeah, it's probably going to try and move higher now. So it did what it had to do, and the buyers came in and survived, and the monthly and weeklies breakouts everywhere. And matter of fact, if you go back to that daily, even though it came back with heavier volume there, right, this heavier volume, 3750, go back over here and look at it, that takes you into this. Look at the volume comparison here. No comparison. That's why you look at all time frames. If you saw that coming in like it did, and you saw that, right, anchor bar holding it up, bang, you come into it, yeah, it looks scary on the daily, but you come to weekly, totally different story, right? Doesn't even have close to near the volume it's going to need. We only got one more day. It's not gonna print the amount of volume it needs. That's a pretty good setup. This one's going higher. And let's look at the last one here, VTR. Okay, Ventas. So this was trying to set up, or did set up, a retest regen. So matter of fact, let's go on this one. Let's pop out to the monthly first and see what it looks like. So there was a breakout here on the monthly. So I'm going big picture on this one first because I'm not familiar with it. I usually try to glance big picture. I work my way backwards usually. When I'm glancing at them. Big volume bar here. It finally, so it hits it with more volume, right? Comes back, and then hits it again and closes over it. That's the breakout. That breakout could get a retest regen, which could take it all the way back to the bottom of this bar. So it gets over it, back under it, that's a retest regen that's taking place. Now, it could come deep. When you usually come back within 6 bars, the rule of thumb is that you can get the bottom third, so that would be this area down here around 65 and a half probably, let's call it. Okay, so that's that one. Now, let's go back to the weekly now. 65 and a half gets you back to the bottom of this bar and to this. So look at this, that spot we just talked about as far as where it could come back to is about right there, which is the overlap of these two big anchor bars, a wide price spread high volume anchor bar and a high volume anchor bar. That is a sweet spot. If it comes back to here, that's a buy, right? Swing point highs, retest regens, all that stuff, all good. So that would be that, and nothing would be wrong with it, right? On the daily or the weekly, both of them would still be fine if it were to come back into that price zone. And then finally, on the monthly and the weekly, let's come back into the daily now. And the daily, now 65 is a long way down, right? It's way down here. This thing would look like heck if it got back to there. If it doesn't get back that deep first, where would be the spot that you'd look for to buy this thing? Even if you're trading it the other way, where would you short to, right? Well, these two bars, the bottoms of those bars look pretty important. And so I would be looking at this little zone right there, that little spot, right? That's the spot that you would expect this thing to try and hold. If I'm a buyer and I buy here, right, I expect there to be demand there with me. And if it is, I've got the wind at my back, so to speak, right? And as soon as it comes down here, boom, goes back the other way is what you're looking for. If not, it's a great spot to actually buy because you're expecting others to buy with you. And if they don't, you don't have to hang around very long to know you're wrong. And so you can take a shot at it, so to speak, if you want to do something like that. Now notice here, one of the things we try to do is look at retest regens because they give us a warning system. So here's a retest regen. It comes into it. The breakout was right there. This bar, it's not there. It's the next bar. And so you got a little volume there. It comes into it with more volume on the way back, doing 3.3 on the way back. That was 3.3, and then the breakout was 2.2. So you're hitting it with a little bit more volume. That could get it back into all the way into this bar. And let me see here. It's already retested it once, so this is the second, so your odds are less than 50. So it does look to me like this is going to try and trade to this area here. Now, if this area fails to hold, right, then that area that we identified on the weeklies and monthlies is the spot you want to be looking at to buy it. If you're trying to short this thing, of course, you'd be looking at the ABCD structure that's forming here, right, given today's trade, and you'd be looking at it. And if you don't want to take the breakout, usually, the breakout was right here on the daily, broke underneath this swing point low. And that did just do a bearish retest and it's trying to regen lower. So I expect, like I just said earlier, I expect this to try and make it back to here at least. If you wanted to short this thing, right, your target's down here. You have to get over this area, right? So you might just let it hit that area, bounce one more time, and then short. So you'd have nested ABCDs on the way down. And you don't have to give it much in terms of risk, right? Because now you're going to have another bearish. If it gets down there, it's going to break this one too. And then this little congruent area here becomes tough resistance, a supply zone, allows you to short it. So you can look at it either way you want. All you got to do is identify what's important, and then you can look at both sides of a trade. Where is it? Where should it try and go to? Is the trend with it or not? Shorting in this market's tough because you're shorting against the trend in everything else mostly, right? So it's hard to make shorts work in a market like this. You typically have to go with the trend. If you're shorting, those trades are going to be really short term in a market like this. So you get money, you take it, you get out of the way, you let it bounce, you short it again. Folks, thanks for joining me. That's it. Have a great one. Take care.